Joint arrangement. The objective of the Indian accounting standard is to establish principle of financial reporting by entities that have the interest in the arrangement that are controlling in jointly. Standard requires a party to a joint arrangement to determine the type of. So first we explain this. So India has established this standard to find the interest in arrangement that control jointly. We both companies join together to construct this build dam, construct this building, do this project. Such a way they have joint interest. They have the both going to benefit from it. This accounting for joint interest, joint arrangement. The standard requires a party to one joint arrangement to determine the type of joint arrangement type and in which it's involved by the associate, which are rights and obligation arising from it. Then rights and obligations. So mainly in a joint arrangement, you have to see three. What is this type of joint arrangement? First point. Second, what is the right they got it? That is, if they do it, what they gain, and what is the obligation? What is the input they get, resource they get should put in human resource, capital resources. Sam, what kind of obligation? If not do, what is the problem? We contingency need to plan. This all comes in joint arrangement. The standard shall applies to all entities that are party to joint arrangement. So this NDA is not only for company, public companies, private companies, LLP. Doesn't mean like whoever the entity who has joint arrangement they can do. Example with the LLP they can come joint arrangement. Individual they can have HUF they can have firm they can have joint arrangement. AOP they can have joint arrangement. BOI they can have joint arrangement. Association. So way whoever may have joint arrangement they can do. Joint arrangement is an arrangement in which two or more parties have joint control. So two or more parties have joint control. The joint control is then the contractually agreed sharing of control of the arrangement, which exists only when decision about the relevant activities require the anonymous consent of the party sharing control. Anonymous. So party A, party B, they are joint agreed through an agreement, not only agreement in writing but also in unanimous consent. So the activities what they do, both of them has a concern. If any problem arising out of the contract arrangement, then both of them are responsibility. You are responsible for the problem, but I am responsibility for the profit. Doesn't work in this way. Joint agreement doesn't work in that way. एक मिनट. Hmm. The standard classifies joint agreement into two types. What are two types? Joint agreement and joint venture. So joint operation, joint venture, JO and JV, two type of joint agreement. The classification of joint arrangement as a joint operation and joint venture depend upon the rights and obligation of the parties to the agreement. So why they are classified? Because of the right and obligations. Joint operation is a joint arrangement whereby the parties that have point of control of the arrangement and has a right to assets, right to obligations of the liabilities and relating to its agreement. Those parties are called joint operators. Joint venture is a joint arrangement whereby the parties have the joint control of the arrangement and a right to net asset of the arrangement. Those parties are joint venture. So the difference between both is they both have the rights to, but in the case of right to assets and obligation to liability, not everything. Only the net asset, net thing. What happening after the law? After the joint operation, both they do during the process, they will put in resources, they will see the liability, they will pay off the liability, they will get the profit, all thing happening during the process, that is joint operation. But the joint venture at the end of the thing, after completing the process, they will get the amount that they will share. That is joint venture. And it determines the type of joint arrangement in which involving by considering the rights and obligation. So always joint arrangement is based on the rights and obligation of the parties. The entity assesses the rights and obligations by considering the structure and legal form of the arrangement, the contractual terms agreed to by the parties to the arrangement, and in relevant other factors or circumstances. So the entity assesses the rights and obligations considering the structure and legal form of the arrangement. The contractual term agreed by the parties to the arrangement. What is a contractual term agreed to parties for? So that is also considered. The standard requires a joint operator to the account of the assets, including the share of assets held liability and jointly liability, including share by any liability, including jointly. The standard requires joint operators to account for the assets, including a share of interest held jointly and account for their liabilities in the share of including liability jointly. It's a revenue from the sale or the share of output arising from the joint operation. They want to account for the sale and it is share of revenue from the sale of output by the joint operation. This account that also and accounts their expenses, including share of their expenses jointly. It accounted and relating to the interest in the joint operation according to Ind AS. They want to account it. What are they into accounted? First, they need to account asset, then liability, asset and liability, and then also revenue. Also, they need to account. Not only revenue, they also need to account share of revenue. Not only share of revenue, share expenses also they need to account. Not only that, the interest they need to these all to be accounted as per Ind AS. That is what's been said in this paragraph. A standard requires a joint venture to recognize its interest in the joint venture as an investment. So in the books of account, they need to joint venture need to be considered as investment. And onto the accounts that the investment using the entity method and accordance to Ind AS 28. The even investment in associates and joint venture unless the entity is exempted from applying the equity method as specified in the standard. So they need to follow equity method. So this has been said in DAS for joint venture and joint operations.